Huge week in the markets this week. First full week of 2025, first full week after the holidays. And there are some big things on the table. So I'm going to be giving you a market update. We're going to be talking about some individual stocks, including Tesla, Nvidia, Microstrategy, and one surprise stock that I'm going to be leaving until the end. One of the best setups that I see right now. Everything will be included in the chapters below because I respect your time and I don't want to waste it. Let's get right into it. You guys love these updates. I love the feedback from the last one, so I'm going to keep continuing to do them until you guys get sick of me. First and foremost, let's go over the S&P 500 and then I'll jump into the individual stocks. So looking at the month of December for the S&P 500, the S&P 500 was actually down 2.73%. Now, why is this significant? Well, in one of my latest write-ups in the Discord Trading and Investing Academy, one of the major data points that I noticed was during election years, we tend to see a green December. These are the last 5 Decembers in the last 5 election years, going back to 2004, plus 4.63%, plus 2%, plus 0.9%, plus 1%, plus 3%. Those are the last 5 Decembers in a row during an election year. Do you want to know when the last time that the S&P 500 had a red December? In another one of my recent write-ups, I showed you that the last time the S&P 500 had a red December in an election year was the year 2000. Now, one thing that is significant to note here is that the market had made all-time highs. We were coming off a rate hiking cycle where we hit above 5.5% on the Fed funds rate. Also, the month of January was actually green in 2001 during the inauguration. So if you look here, January 2021, we were up 4.45% on the S&P 500 before then declining another 43%. Obviously hitting a recession, hitting a bear market. This was the dot-com bubble right here. But we had recently just made all-time highs and we were off of multi-year bull markets, very similar to what we see now, where we are in back-to-back bull market years, back-to-back years of plus 20% rate hiking cycle that took us above 5.5% on the Fed funds rate, and we are now starting to cut. Something else that's really significant and curious is that the 10-year and 3-month, those of you who are fans of this channel will know what I'm talking about here because we've been tracking the bond yield inversions ever since the Fed started raising rates, really. But if you look here at the year 2000, right at January of 2001 is when the 10-year and 3-month uninverted. And if we look here, currently the 10-year and 3-month is uninverted, and it first uninverted in December of 2024. Very similar structure to the year 2000, right? Multi-year bull markets coming off of a rate hiking cycle. S&P 500 made fresh highs, a red December during an election year, and the 10-year and 3-month uninverting. And although earnings have been rather good, if we take a look at the S&P 500 forward price earnings ratio, we are nearing levels that we saw in 2020, which are also near the levels that we saw in the year 2000. So a lot of parallels here between now and the year 2000. No, I don't think that means that I don't think that this insinuates we're getting a dot-com bust, but is there likely going to be weakness in 2025? Could we tip into a recession in 2025? I think the answer is yes. Whether that's shallow or not, I don't know. On the daily on the S&P 500, we already wiped all of December's gains. This right here was December low. We already took liquidity below that and are starting to climb up. So, obviously we could get a green January leading up to the inauguration. You do see this big honking head and shoulders here on the daily. I am not really optimistic about 2025, only because we've grown so much in the last couple of years. It's very rare we get back-to-back years of plus 20% on the S&P 500. We are coming off of, plus 6,000 on the S&P 500. Most people didn't even think we would hit 5,000, let alone 6,000. Bond yields are only going up after the Fed cut. The Fed cut right here. This is surprising the living crap out of me. I did think we would get a rally in bond yields temporarily because of a sell the news type of effect. But, the 10-year is now hitting 4.6%, almost near where it was in April of 2024. we are likely heading towards 5%, which is something that we came close to doing in October 2023. So the reason that this becomes so precarious, and the reason that the yield curve uninversions tend to throw us into recessions, is because in order to tamp down long-term yields going haywire 10-year and up, especially because that's going to be very expensive for the government to pay back. Remember, the government has to pay back these loans to the people that bought these treasuries. The higher the yields go, the more pressure that's going to put on the government, the more pressure that's also going to put on the economy, the more pressure that's going to put on businesses, the more pressure that's going to put on consumers, right? So right now, bond yields are going haywire as the yields continue to grow even after the Fed cut. We already saw Jerome Powell saying that they are close to the end of the cutting cycle, at least for now, which spurred a secondary rally in bond yields, right? It looked like we were going to stop climbing. We were finally coming back down. And then Jerome Powell, during the Fed meeting in December, said, we're probably going to get close to ending our cuts here. So once again, bond investors started getting worried, selling off their bonds, not buying bonds. Yields are spiking once again, right? The government is going to have to put pressure on the yields to come down. Also, I talked about this before, but Donald Trump might put pressure on Jerome Powell to lower yields because he has done that before, and he has already intimated that before even taking office, right? So I think that's going to be the war or the battle of Donald Trump's term, is trying to get the Fed to really turn towards easy money, right? By not only buying treasuries, but lowering the Fed funds rate and hopefully bringing down these yields. However, if the Fed doesn't do anything, what's going to happen is likely this is going to put pressure on the economy and throw us into a recession in 2025, in my opinion. Again, I don't think that necessarily means it's going to be a dot-com bust, but am I excited to buy stocks here, the S&P 500 here on this pullback? No. My excitement for buying the dip has definitely waned. I think I bought enough of the dip. I was rewarded for it. Told you guys about Tesla in the 150s and 220s. Told you about Nvidia in the 90s. Obviously sent all those alerts in the trading and investing Discord. And by the way, if you want to join the investing only portion of the Discord, for a limited time, it's only $35 a month. For those of you that are not interested in day trading or swing trading, otherwise, you can pay for the trading and investing portion of the Discord, both together, and watch me trade live every single day. So either come and trade live with me every single day, or just pay for the reduced rate for the investing only section of the Discord, where you will get all of my long-term analysis, stock buys, long-term option plays such as leaps, etc. Right? Choice is up to you. It's there. But yeah, so on the S&P 500 or on the SPY, a close above 602 for me will confirm, confirm bullishness. But if we get hampered at that 602, then I think this head and shoulders plays out for the rest of 2025. And like I said, whether it's a 10% correction, 20%, 30%, I don't know yet, right? I really don't know. I think the Fed is going to also have updates on its policies, etc. Like I said, the war between Donald Trump and Jerome Powell is a whole other story. So I can't predict that now. But if we don't close above 602 in January and we make a new low instead, then I will be more bearish in the short to midterm than bullish. Now, in terms of Tesla, like I told you in my Tesla update, if we revisit the highs here, right, we hit a high of about 360 back in November, hit that high again at the end of November. So if we had hit that high, then I would have likely taken a long on Tesla. I didn't take a long on, I still have some Tesla shares, but I didn't take a new long on Tesla, even though we were up 8% on Friday. Still, we are not in bullish territory in the very short term, right? Like if you look at the trend, if you take a look at the trend since April 2024, yes. But if we're talking about this, we definitely did break structure to the downside, right? So that right there is market structure broken, and we are now retesting that level. So for me, in order for Tesla to confirm bullishness and continue, I need a close on Tesla above that 440 level, to be honest, back above where we broke market structure. Otherwise, what could happen is, Tesla could get rejected here. So I'm going to be looking intently here, not opening any new positions. When you're looking at a chart, it's not like you can just open a position anytime. It's like looking at an intraday chart when you're day trading. You need confirmation and you need a setup actually to open a position. And here there isn't a setup just yet, in my opinion. Tesla could easily reject, come back down and test that 360 level. It could continue higher and close above 440, in which case I will maybe look for new bullish positions. Right now, aside from selling cash secured puts, I'm not really looking at a new Tesla position, just holding, monitoring, seeing what happens. If we're not able to get above the area which we broke structure, then I will look to take profits on my short-term positions. All right, still holding my longs on Nvidia from the 90s. I bought Nvidia in the 90s. Still holding on to that position, being rewarded very nicely for that. It's back up towards $145. Now, Nvidia is interesting. This is essentially what I was talking about with Tesla. This is what I want to see with Tesla, right? Nvidia did break structure to the downside briefly, but then popped back above. And after creating a new lower low, came back and created a higher low. And now we popped above this high and created a new higher high, right? So right now we are in the midst of a new potentially bullish structure. Also, a lot of people were looking at this head and shoulders. They don't really understand market structure or price action, thinking that that would be the downfall. But those patterns can easily be invalidated because look what we have here. We have an inverted head and shoulders, right? So on its own, head and shoulders or inverted head and shoulders don't mean much. I would really urge you guys to look at levels instead, right? I will be releasing a free course on how to do that more effectively. But in this case, here's a very short example, right? Tesla, we did break structure to the downside. You don't need any indicators or anything either, right? But you can see here that Nvidia, sorry, not Tesla, broke structure to the downside below this low. We have a new low. Now, it could have retested that area and came back down. But what did it do? Retested that area, made a higher low and higher high, right? Higher high, higher low than this one. And now another higher high, higher than this one, right? So we are now breaking structure back to the upside. So, looking at just the head and shoulders without looking at supply and demand levels, without looking at key levels, key support and resistance levels is, a whole bunch of baloney, in my opinion. So for that reason, I think that Nvidia actually is on a new uptrend towards all-time highs. And I think, as I said in my last Nvidia update, 165 is my midterm target. That can happen really fast. I mean, it's already trading at 145. But for me, you could have initiated a new long position on Nvidia here. I'm still holding that position from the 90s. And here you can see my position on Nvidia. Bought it July 25th at 116. Bought another lot August 5th at 99. This right here are just dividend reinvestments. But I sent this out in the investing and trading Discord as well. Now, I also do have leaps on Nvidia that expire in June. But if Nvidia retests this 141 level here, right? If we retest this 141 level here, which is an important level if you look at the 4 hour, right? Then I will likely take shorter term longs on Nvidia. But I already have a pretty sizable position that I'm happy with here, just wanting to sweeten the pot with some options. All right, Microstrategy. This is a very interesting chart. And when I went over it, I said I was waiting for this gap fill, and you can even take a long from this gap fill as long as you're managing your risk. So, the cool thing about swings is you have days to hold. It's not like a day trade where you need things to play out immediately. So what I was saying with MicroStrategy is after this gap is filled, you can take longs with a pretty tight stop limit, targeting the nearest high here at around 435. Now, what's interesting with MicroStrategy is, every stock has its own character. MicroStrategy for sure is one that is super unique because of its Bitcoin holdings. So first things first, the last time that we talked about MicroStrategy, it, I think, bought another 7,400 Bitcoin since the last time we talked. What's even more interesting is where it is currently trading. So right after the new year, its NAV premium was only 1.7. The NAV premium is the net asset value that it's trading above its Bitcoin holdings. So how much are its Bitcoin holdings worth? And what price is MicroStrategy trading above that? So if you look at MicroStrategy's market cap, it was worth at the turn of the year 1.7 times its Bitcoin holdings. Now, what's interesting about that is on the low end, while Bitcoin is at $98,000, right? So MicroStrategy had a much higher NAV at times when Bitcoin was much less. Right now, it has the largest Bitcoin holdings that it's ever had, and Bitcoin is near 100K, and it was trading at 1.7. So if you couple that fundamental analysis with this technical analysis, you can get yourself a pretty nice long. And this is why I was saying that I was looking for additional cash secured puts on MicroStrategy if we hit that level. So not sure if you guys followed along since the last video, but if you sold cash secured puts at that level, then you were sitting pretty. Now, the cash secured puts are not paying as much on MicroStrategy as they once were because the implied volatility is not so high, but it still was paying pretty nice. Even now, if we take a look at MicroStrategy cash secured put, and this platform right here is called Public, by the way. Shout out to Public, regulated broker in the United States. It's a really cool platform that I'm going to talk about in a second. But if you look at MicroStrategy options, even if you went out a month, right? Let's say that you went out to February 14th, you could still sell the 200 puts for $465, and that's after the price pump that we recently saw, right? That's after this. You could still sell the 200 puts on MicroStrategy, which if it got there, you would be assigned at 200 minus let's say around 5, so around $195 per share. That's why I love selling puts on volatile stocks that I think have some holding value, right? But if you did that, you're sitting pretty right now. Otherwise, I think that there is a long opportunity on MicroStrategy. But if you missed jumping in from that gap that I was talking about, then in my view, you're going to have to wait for a pullback to the nearest support level, which at this point, you might be looking at the 315 level, right? Inside this fair value gap where you have these equal highs here. This is on the 4-hour chart. But like I said, with MicroStrategy, it's going to keep rallying as long as Bitcoin keeps rallying. The minute that Wall Street loses confidence in Bitcoin, that is when I think MicroStrategy's stock price is going to take a hit. And plus, when we enter a recession, Bitcoin will tank along with that recession, as it always does. So I don't know that Wall Street can stomach another 60-70% drop in Bitcoin and still be kind to MicroStrategy. But as long as Bitcoin is, in a bull market, and as long as we're not in a recession, I think it's selling puts on MicroStrategy way out of the money is real easy work, right? I think that Bitcoin does need to avoid this fair value gap here, this level here between 102 and 105. I think it needs to cross above that to reach the next frontier, as opposed to getting railroaded here potentially for a trade back down, right? But structure isn't really broken yet on Bitcoin, so I don't have that thesis just yet. And lastly, the stock that I want to talk about, I already have leaps on this. It's Uber. I have the Uber 65 leaps currently up 26% on this. Obviously sent that out in the trading and investing Discord as well, but up 26% on the Uber 65 calls. The reason that I like Uber, for a couple of reasons. One, their fundamentals, which I'll get into in a second. Two, their technicals, right? So Uber started tanking after the whole robotaxi hoopla came out. But especially since Tesla missed deliveries, then, which is something we didn't talk about actually, but especially since Tesla missed deliveries, Uber started climbing, right? The less the Tesla narrative is in play in the short term, the more Uber will rally. But I really think that it sustained an overreaction drop here after it fell from about $87 all the way down to $59 into this gap. And we are now seeing a nice jump in Uber. So from a technical perspective, I do like Uber here. It was also oversold, which is something that it doesn't typically do. And every time it's been oversold on the daily, we have seen a nice rally in Uber. It's very consistent in that regard. Also, the volume profile, you could see here that most of the investors piled into Uber in that $62 range. So we fell slightly below that. And I thought that this was a great positioning here for longs. Also, it is supported fundamentally, right? If we take a look at Uber, Uber is actually valued really well here, especially based on its growth rate. So if we take a look at Uber's growth rate, you could see that its revenue, its 3-year CAGR, right, compound annual growth rate, is 41%. Its EBITDA growth rate year over year is 197%. Gross profit margin really healthy at around 33%. Net income margin not even close at around 11% if you take a look at its competitors here. And the most important metric is its cash from operations, $6.21 billion, not even close to any of its competitors. Lyft is at 740 million, right? So Uber, a very strong company fundamentally, definitely turned that ship around. Whatever, I can't remember the new CEO's name, not new, but latest CEO's name. So from a technical perspective, I really like Uber. I'm going to be holding these leaps. We'll probably offload them if we get to that $70 range before March. Remember, these are options. These are not shares. I also did buy shares, but I'm banking on those leaps hitting in the short term. So around that $70 range is where I'm looking to take profit on those leaps before March. Now, why do I use public? For a lot of reasons, but I'll give you a couple here. One, I really like that they provide an array of bond accounts. So they do have these bond funds, corporate bonds, government bonds, etc. And they currently have a bond account that has a 7% yield. Also, not only are options trades free, but you also earn rebates. So they share the order flow money that they get from their options trades with you. So you earn rebates on the options trades as opposed to the options trades just being free. And lastly, you can earn 4.1% APY on your cash that's just sitting, any unused cash, right? That's if it's not in some sort of bond account. If you just have the cash sitting there, 4.1% you can earn. And the access to information is crazy. So like, for instance, if I want to ask it if what stocks have unusual trade volume today, right? It will immediately spit out this info using AI. So its AI assistant is remarkable. I can even ask something more specific, like, did Uber beat the last 4 earnings calls, right? Let's see what it says here. Uber's earnings performance over the last 4 quarters is as follows, and it gives you an earnings summary of the last 4 quarters of Uber. It's spectacular. It's rather remarkable, honestly. What is Tesla's free cash flows? Let's see what it says here. Let's see if it can handle this question here. Tesla's most recent free cash flow is reported at $2.742 billion, reflecting a significant increase of 222.97%, blah, blah, blah. But I really love this. I don't think any other platform has something like this to this degree, where as you're trying to invest or trade it, you can ask it questions that would help you with positioning, would help you with size, would help you with expiration date, right? Based on the information that it gives you. Like I said, Public is based in the US. So if you want to get an account with Public, make sure you click the link in the description below. Sign up for an account with Public. You could trade options, you could trade stocks. There are margin accounts, bond portfolios, etc. Anyway, traders, that is it for this update. Let me know below, what do you think is going to happen first? Do you think Tesla's going to go to 500 first? Or do you think Nvidia is going to hit that $4 trillion market cap at around $163 first? Let me know what you think happens. Also, do you think that we are going to get a recession in 2025? Why or why not? I love to hear from you guys. Come trade with me live every day. Link is in the description below. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.